Hey guys, welcome back. In today's video, I want to walk you through a trade that I actually missed today. It was a beautiful setup that I've been waiting for to play out for quite a while here on Alibaba. This is one of the stocks that I love to trade options on, although it can be a little bit tricky sometimes, especially if there's not much volume, and today was one of those examples. So I'm going to walk you through the setup, what I was looking for, how it would be executed, and then at the end of the video, I'm going to share with you a sneak peek of a journal that I'm working on. I'm going to plan on releasing freely to you guys here on the YouTube channel. As soon as I get it done, I'll be making a video explaining the journal and how you can use it. But yeah, we'll take a look at a sneak peek of what I've done so far with that journal and also kind of my performance for the month so far. So if you guys are new here, I'm Tex and I share my journey with trading and investing in the stock market. I really appreciate you watching. Let's get started. Alright guys, so as I said, I missed a trade on Alibaba today. Unfortunately, the power went out about 10 minutes before the market opened. You know, these things do happen. It was very frustrating at the time. I was even posting in the chat room how upset I was and that I was just not going to trade anymore even when the power came back on, because I realized that I was emotionally compromised and that I was more likely to do more damage than good. So I did sit out. I didn't take anything else. I just decided, that's it. I'm done for today. Maybe there will be something else tomorrow, but I know that it is Friday, so I'm not really going to have my hopes too high. To be honest, this month has been a little bit difficult. I've had a rough start to the month. I wasn't really red, but I had a nice start and then it just kind of slowly dwindled away. So we'll see that at the end of the video, but let's take a look at Alibaba. So the reason that I was looking at the stock is because we had this very good consolidation here inside of this range between the 268 and the 252 level. For some macro context, if I zoom out on this, Okay, so Alibaba had a really good pullback from its all-time high up around 320 down to 211.70 and it tagged it perfectly. This was actually a swing high from back here. Let's zoom out a little bit more. So you can see this was a previous all-time high around that 211.70. And so there was some news that came out this year where they were talking about delisting Chinese stocks, and Alibaba was one of those that might be on the cutting block. So obviously investors panicked. There was a massive gap down between these 2 days, sold off right into that 211.70 absolutely perfectly. This is why support and resistance is just absolutely king, guys. So I'd actually picked up some in my long-term account on this push into 211.70. And then I got scared out a little bit early because they were talking about specifically delisting Alibaba again. So I sold, and then they came back and said, no, we're not going to delist Alibaba. It's fine. It's safe. And then it moved higher. And so I bought it again, but at a worse price point. I got it in the 230s, around 235, but I liked it much better around 211. It is what it is. But the reason that I especially was watching this for a day trade is because we can see that it made this move up off of that 211.70, and it's been kind of coiling, kind of consolidating inside of this range between 268 and 252. And I liked it because it's especially been holding up here toward the top of this range, having put in just the recent higher low right here. So you can clearly see how it's been consolidating here in this range, and now it's getting tighter and tighter as it's coiling back up into that very key trigger point right there at 270. Now overhead, we have the 100 period moving average sitting right there. Wasn't expecting too much from that. Obviously, it's been struggling with it. Yesterday, it tested it and rejected. But I figured that once we get, especially with this nice curling coming in, more eyeballs looking at this, we should see some buyers step in and push us right over that 100-day. And then what are we looking at overhead? Now we have an unfilled gap right here. This was from a gap down between these 2 days here. It tried to fill part of it here and it failed and came back down lower. So this gap right here, here's the bottom of the gap, here's the top of the gap. This had very good potential if we could break over that trigger point at 270 to get inside of this gap and possibly fill it today. And I really loved it. Unfortunately, today was the day that I wasn't able to trade it. And then moving above that, we have another unfilled gap above us that's quite a bit larger. So I didn't necessarily think that we'd make, all the way up here today, but there's still potential going forward with this. Unfortunately, there's still some weakness in the market today. I've been kind of telling the guys in the chat room, kind of warning them that, look, we're at a lot of risk of a rug pull in the market. The market overall has just been very frothy. We've got a lot of extension away from the short-term moving averages, your 5-day, your 9-day. We did finally pull back and test that yesterday. You can see this pull here yesterday, and then today we pulled again. So I told the guys, look, we're at risk of rug pulls, and what that is basically a liquidation break. That means that you have buyers that keep stacking on at higher and higher levels. And if they don't get that resolution higher that they're looking for, you get all of these buyers who are poorly positioned at higher levels, that when things start to pull back, they're going to start panicking, they're going to start bailing on their positions, and then you can get these massive drops just seemingly out of nowhere. So that's why they're called a kind of a liquidation break. I also call them a rug pull. And you can see that we got one today, although we did bounce nicely off of it. And then yesterday we also had another massive rug pull, and you can kind of see how it just came out of nowhere. It's just boom. I mean, it didn't really give you a good opportunity to get in. It just out of nowhere, just huge rug pull. So I knew that we were at risk of this, and I kind of warned the guys about it. And unfortunately, the timing of Alibaba breaking out wasn't perfect given the risk of this with the market. But when we go and look at the daily time frame, you can see how nice this really looked. Okay, so we had the first move. We're looking at a 5-minute time frame. You see the first move is down, which is great. We want to see that gives us our initial high of day right here. Okay, so the next 5-minute candle comes up and breaks that initial high of day. Now, this isn't really an opening range that I want to take because we do have that very key trigger point sitting just overhead at 270, and this is obviously still very early in the morning. So what I ideally want to see, and it did exactly that, is to push up into that trigger point at 270 and then pull off of it. Don't just bust through it, right? Test it, pull off of it, and then come back up into it. So it comes up into the 270, it tests it, and it rejects. It pulls off of it. It gets back over that initial high of day at, 268.85, and then it curls right back up into that trigger point, right back up into the 270, and then boom, it explodes higher. Now, the volume wasn't super great on this from what I heard. I didn't see the live price action myself because, like I said, my power was out. But Alibaba is one of those that can trade kind of thinly anyways. So it's not the easiest to trade with momentum, preferably when you're obviously taking a breakout trade. You want to see that clear momentum and that clear volume coming in that gives you conviction, especially if you're going to be jumping in with size, right? When you're getting in with size, you want to see it go. You don't want to see it just kind of dawdle around and kind of take its sweet time to go, because that does not make you comfortable when you're in with size. But you can clearly see, look at the volume histogram down here. You can clearly see the increasing volume on the move up. So it was there. But this is looking at a 5-minute time frame. It's a little bit trickier when you go and look at a 1-minute time frame. Let's switch over to that 1 minute and take a look at this. So one of the things that I've been noticing, especially with breakouts lately, is that a lot of the time the breakouts that I've been looking at taking, they end up working, but a lot slower than I'd like. As I said, if you don't have that very clear momentum coming in, when you get in with size on a breakout, it does not make you feel warm and fuzzy if it's just kind of hanging out there for a little while. And when you look at this on the 1 minute time frame, it looks a lot messier, right? There's a lot of upper wicks here, and then it comes back down, and then here comes the breakout, right? And then it wicks up right into that 100-day and then gets rejected right down, and then it comes back below the trigger point. Right here was really key. You can see for about 3 or 4 minutes right here, it gets over the trigger point and it holds, and then boom, there it goes. So it's pretty clean right there on the 1 minute chart, but look at your volume. It's all over the place down here. So looking at the volume histogram down here, it's a little bit trickier to read on the 1 minute chart. And also look at your candles, right? You have this move up, and then it's just kind of small body candles, another move up with a long wick as it comes right into the bottom of that gap that we're looking to fill. Obviously, there's going to be some resistance there, and so it's just not super clean. You don't have these very big bullish 1 minute candles, just clear momentum, just surging higher. You're not getting that, right? We're seeing that it's a lot slower, but it does work. And unfortunately, it's not really my style of trading, especially like I said, when you're jumping in with size, it's hard. It's really hard to hold for a move like this unless you have that very clear momentum. But switching to that 5 minute chart, you can see how much cleaner this is. And it actually gave a very nice flag as well. So you could have traded this either taking the flag break, or you could have waited for the trigger point over 270. Obviously, if you're taking the flag break here, you're going to have to pay yourself into the 270 here. And then once it confirms over that, you could add into the position. Next target has to be the bottom of the gap, because anytime you get to the bottom of a gap, there's obviously going to be overhead resistance. But once you get inside the gap, you're good. I mean, you should be looking for a gap fill. Unfortunately, we didn't quite get the gap fill. The market rolled over, and so it kind of pulled down Alibaba with it. There was also a resistance level right here from the pivot point study. That was your R2 level. That's a key reversal point. So you know, it's not, and that's a pretty decent size move anyways. So it's not uncommon to kind of see it pull, especially off of that R2. And that's exactly what it did. Given the weakness in SPY, it just made it very easy for it to come back down and kind of back test the 270 where it did pop up off of that. So that's kind of nice. But like I said, when you're looking at this, you've got your trigger point. You're right there at 270. You get the clear breakover and you're in the trade. Or you can look for a flag breakout. And basically, you're playing a flag breakout or an opening range breakout over this very key pivot level. Again, when you have things lining up like this on your daily chart, when you have this very clear, let me just get rid of this. When you have this very clear tight consolidation that we saw on the daily chart here, it keeps coming up, keeps testing that 270 level. It just looks primed to go. You can literally see it curling up here. It just looks primed to go. When you have that lining up and then you get the trigger on your intraday time frame, I mean, that's a trade, you know, that's a great trade that I'd be looking to take. So anyways, that was a trade. Unfortunately, you know, it may not be over yet. We'll see. We're back below the 270, so I kind of don't like to see that. But the trade was there. So if you guys caught that, if you were watching that, I've been harping about it in the chat room for quite a few days now. Great, good for you guys. Really happy for you. But we'll see what comes of it coming into the next week. So with that said, let's wrap up the video by taking a look at this journal that I've created here. So this is February so far, all of the trades that I've taken. And what this is, like I said, this is just a spreadsheet. I'm using Google Sheets for this. And what I've done is I've entered all of my trades over here on this side. So basically every trade that I take, I put all of the appropriate data in here. And what it will do is automatically calculate your statistics over here on the left side. All right, so just kind of walk you through this really quickly. Obviously, you know, I'm going to be tracking things like the day of the week, the stock that I traded, the instrument, whether it was, you know, shares of the stock or options. So 820 call, for example, with Tesla. What is the strategy that I'm trading? So I have a list of strategies that I like to trade. You know, how much did I make or lose on the trade? How much, you know, fees and commissions did I pay? What is the entry criteria? You know, did I get in according to plan? Was I too early, too late, impulsive? Exit criteria, trade management, and my emotions during the trade. So all of what I consider the most important things to track with your journal is here, and barring basically tracking every single entry and exit, because obviously when we're day trading, we'll often have multiple entries and multiple exits. So it can get a little bit convoluted in your journal when you're tracking every single entry and exit. And for me to be able to track the key performance metrics that I'm looking for, I don't really need to see the price I paid for every single entry and every single exit. So this is pretty much everything that I need to track. And what I like about this is, like I said, it has the most important metrics from like TraderView that I like. For example, we have, you can see the number of winning trades, losing trades. You can see my total win percentage, which is really low this month. Actually, for me, most of the time being a scalper, my win percentage is closer to 75%, but this month has been kind of a difficult month. You can clearly see from the P&L curve, right? I had a nice start to the month and just kind of slowly bleeding away the profits, but kept risk really tight. So that's really good. So it never really went super red. I only dipped a little bit into the red right here. But I kept risk really tight, which is good because right now I have a lower win rate this month. So you see my average winner is $138.66 and average loser $58.27. So really good risk reward, which is good considering that my win rate is lower this month. But what I also love about this is that I can see my win rate for long trades and short trades. Now I haven't taken a short trade yet this month. I'm usually a long bias trader, so I know that I have a much better winning rate with long trades than I do short trades. But it's kind of nice to be able to track those stats here, the difference between the long and short trades. And then just other things. I haven't quite worked out the formulas yet for performance by hour of day, as well as the average hold time for winning trades and losing trades. I'm still working out some of these formulas, and once I get all of that done, then I'll be releasing the spreadsheet. Moving down here, you can see how I perform with each of the strategies, my win percentage, and the total gain loss for each strategy, as well as emotions. So again, based on the emotions that I was feeling during the trade, I would input those for each of these trades over here. So in the emotions column, I would input those, and then I can track how my performance was given whatever emotions that I'm tracking. And then finally down here at the bottom, we just have some nice bar graphs where it's a little bit more pleasing on the eyes, where you can see my performance based on the strategies, day of the month, or day of the week rather, and my emotional performance. And the last one I want to put down here is performance by hour of day. So that's one of the other stats that I really enjoy tracking from TraderView. So the idea is that I can track my trades using this, which is going to be totally free compared to paying a service like TraderView. Obviously, TraderView is still nice because it plots your entries and exits on an actual chart. If you want to do that, you still have to manually mark up your charts or annotate your charts, as I showed you how to do in the course. In case you missed that, I'll put a card at the top of the video. But just in general, for tracking your performance, I just felt this was a lot easier, because if you get too complicated with your journal, it's going to be one of those things that you won't keep up with it. So you want something that is effective at tracking what you need to track, but is something that you will keep doing day after day, because it's really important for your data that you are doing that. So the idea is that each month will have its own page. For example, go down here. Here is January, where I just put in some sample trades. This isn't my actual journal for January, but when I was creating the journal, I just put in some example trades in here to give you an idea of what, how it would work. So the idea is each month will have its own page. So January, February, March, etc. And then I'll have a summary page that will basically give you these same statistics, but for the entire year. So I still, like I said, still need to work out some kinks, but I've got a couple of people who are beta testing it for me right now. So depending on what they come up with and what I come up with, we'll eventually get it all worked out. I'll make a video explaining the spreadsheet, exactly how you can use it, obviously in more detail than I am now. And it will also include a download link for you guys to access that. So I'm really excited about that. And with that, guys, I'm going to wrap it up. So I really appreciate you guys watching. If you have any questions or comments, be sure and post those below. And do me a favor, hit that like button if you are enjoying the content. Really do appreciate that. So take care, guys, and I will see you in the next one.